The S&P 500 is going down, but don't count the bear market rally out just yet. I'm your host, Steven Van Metre, and thanks for joining me for part one of the Sunday Chart Show, where we look at the technicals and momentum of the S&P 500, Nasdaq 100, Russell 2000, and junk bonds. Let's kick this off with the S&P 500. We're looking at a breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average, currently just under 38%. And if you don't remember this, when you see a stock above its 50-day moving average, that is considered bullish. It's a bullish trend. When it's below, it's a bearish trend. And when we're looking at breadth, we want to see that when prices rise, we want to see participation. And we did. We noticed we went from these deep oversold levels on the breadth, which was below 20%. You notice over the last year, we haven't really seen levels this low. And so that's going to bring investors in and traders in, and what you notice is price rallied and breadth went up with it, and that's exactly what you want to see. But I want to just note that breadth is starting to slow down here and almost leading price kind of lower. And notice that breadth bottomed once, twice, and then took off, which is a good sign. But what you're not seeing is a big move in the S&P 500 stocks above their 200-day moving average, which is just under 35%. And what that means is when a stock is over its 200-day moving average is considered to be in a bull market. Below, it's in a bear market. So really 65% of the S&P 500 is still in a bear market, which means that the 50-day moving average, without even looking at a chart, we already know this, is well below the 200-day moving average. Now look at the participation here. Notice how the market went up, but not many stocks moved above their 200-day moving average. We didn't see a huge thrust higher here. In fact, we're seeing some of these stocks moved above their 50-day moving average and are starting to fade it lower, and that is not something you really want to see. It's kind of a leading indicator when breadth starts to fade. Now, what are the bulls hoping for here? Because you could still get a pullback at a much bigger move higher, and that would be okay because they're looking to go from this level where we're down around 30%, and they're targeting up here in the 50 to 60, even ideally somewhere in the 70-80% range. And how do we know? We'll go back and look over time, and that's what's nice about historicals here is you see when it gets to these lower levels, it rebounds up quite nicely and somewhere in between 55 and 75%, and that's what the bulls are targeting. That's what they're betting on. And when we start looking at momentum, we see that there's momentum is behind this trend too. So maybe breadth isn't fully validating the move in price, but momentum's starting to move higher. We have the relative strength indicator, which is above 40, currently at 50. And so when the RSI is above 40, that means momentum is building. And we know it didn't come down to oversold levels, which happens at 30, but it got pretty close. And we see that momentum started to bottom ahead of price. And then what happened is momentum started to build, leading price higher, and that is a good indicator. And how about the MACD, the moving average convergence divergence indicator? And all we care about with this is a crossover, and you want to see this black line, which is the MACD line, crossing the red line, which is a signal line. And again, it started to bottom out early, it crossed. That's telling you momentum is headed higher, and that's a positive sign too. Now, the only question is, does the RSI and the MACD start to roll over here as price is holding up? Well, I think price comes down first, and then we'll see perhaps another rally come off of that. But let's take a look at Momentum Timer Pro, which is a proprietary report that I created that you could sign up for free. Believe it or not, there's a link in the corner and the description below. Still not paid yet, don't know why. But what it looks at is three indicators, its own proprietary signal. It looks at the RSI over 40 and a positive cross on the MACD. If you get two of three of those, validating a buy signal, again, RSI over 40, MACD positive cross, or its own internal signal, it flips from a sell signal to a buy. And if you would have followed this report 6 days ago, you could have caught some of this rally. Now, if you're a long-term investor, this is the 1 month, 3 month, and 6 month signal. You see how there are none. It tells you broadly we're still in a downtrend, and that you should hang tight because it's still too early. If you're a trader, though, that signal 6 days ago made you some money. How about we look at the bigger picture? And again, if you're a long-term investor, you're seeing the 21, 50, and 100-day moving average is still headed down. The momentum is toward the downside. It's bearish. And you're seeing all kinds of signals you don't want. You're seeing it below where it was 1, 3, 6, 9, 12 months ago. You don't want that. You're looking as a trader, though, you see it popped above its 9 and 21-day moving average. There you go. That means it's coming off a bottom. And that is what the signal was looking at, is that short-term move off of those technical indicators that were oversold. Now let's take a look at the charts, because I want you to see why I think the S&P 500 is going down, but I don't think the bear market rally story is over yet. Now we're looking at SPY, the largest traded ETF on the S&P 500. I've got the volume profile turned on here. You notice this red bar up here. This is showing where the most shares are traded in the last 2 years. And as we've talked about during the weekly show, that a lot of people, a lot of retail investors bought up here and are now in lost positions looking to double down on that bet and bring prices higher. So what happened is, in the big picture, we saw price come down into the supply zone. And you'll note that there was a heavy amount of buying here, relatively speaking, and what it did is it drove prices up into this higher zone, something we talked about in the Momentum Timer Pro. Picked up that signal pretty early in here, and of course, if you knew that we were just moving between supply zones, that you could have driven a move up to here with the thought, remember we talked about, that could get all maybe up here into the 440 range and run into that heavy volume profile. But notably, what showed up was sellers. Now I want to zoom in to the 90-day and notice that there's still, over the last 90 days, most of the shares traded were above current price. But here's why I think price comes back down to that lower supply zone, is look where the 30-day volume profile line is, and that's telling you the sellers are in that zone. This is a buy zone below, sell zone above, which suggests to me that there is likely another move down into that buy zone. But due to the heavy amount of buying, it won't take much for the bulls to pick that up and drive this back higher. Look at the 10-day volume profile. Again, sellers all the way above there. So what I'm thinking now is we see a move down here into this zone, and that hopefully starts to flatten out the 21-day moving average, and then the real move on the bear market rally is on, and maybe you get up here into the 440 range. Ideally, for those who are really bullish, you can even get higher, but I still think one move down first before that really kicks off. Of course, that all depends on just how much money the bulls are willing to throw in there. Now let's take a look at the Nasdaq 100. Perhaps similar story now, that it's likely to head lower. We're seeing a lot of outflows in the Nasdaq, and we look at the breadth indicator here. The percentage of Nasdaq 100 stocks above their 50-day moving average is just about 34%. And notably, though, we did see good participation here, and that was nice. And we're noticing that breadth is starting to slow down here, and price is validating that. So again, it's just telling us this is perhaps a move off of a very oversold condition, which of course breadth was pointing that only at one point a mere 10% of the Nasdaq was above its 50-day moving average. The last time that happened was back in late February, and that brought off a nice little rally for traders to follow. But if we zoom out now to the 200-day moving average, we see that only 20% of the Nasdaq 100 is above its 200-day moving average. Again, breadth is very weak here, and noticeably it did not thrust up as much and is starting to fade that. So again, we just see that without looking at the chart, we know the 50-day moving average is well below the 200-day, and not many stocks were participating and moving back into a bull market. And some of those that did faded it. Now, bigger picture here, which we've talked about extensively, is traders are going to buy this at every opportunity because they see this market is cheap. They see a lot of stocks under their 50-day moving average, a lot of them under their 200-day moving average, and they're looking for a big move higher here. In the Nasdaq, when you get down to these low levels, look how high it goes. It gets up here to the 80 to 100, almost 100% range, and that is something the bulls would love. Momentum is behind this move. We saw momentum dip down below 40, getting near oversold conditions, stay down there. Price finally settled down, momentum took off, and that drove price higher. That's a positive sign. How about the MACD? You see that it bottomed out and made a positive cross to the upside. Again, another momentum indicator pushing price higher. That's good. Momentum Timer Pro was all behind that 5 days ago, but broadly still in a downtrend as we see the longer term signals are still saying done. So if you're a short-term trader, these short-term daily signals going from sell to buy, this is what you're looking for. Long-term trader, well, you're still on hold. And don't worry, if you sign up, you say, I don't know how to use a report. Well, there's a guidebook and some videos to give you my thoughts on how to use it. Let's look at the bigger picture. Same story as the S&P 500. Price bearish on the moving averages, momentum to the downside. All it's done is pop below or above the 21-day moving average, giving some traders a little shot at making some money here. Let's look at the QQQ. And we can see all it did was move from one supply zone, didn't even get to this other zone. So maybe I need to almost redraw the charts or draw these lines down. And it looks like perhaps that the supply zone is really a little bit lower than I've got it. Now you can redraw your supply zones, because this is something that, charts are not absolute. They morph over time. You learn where things are at. And how do you know where a supply zone at? Well, that's where you see these pop outs in volume. And this is where buyers and sellers are at. And then you can start looking and saying, does it make sense that I move these lines down? Because when price came down, it came into a supply zone and buyers were there. Now those buyers turn into sellers. Now we get into that supply zone and there's still sellers there, suggesting the Nasdaq 100 comes back down around here to QQQ to around 290 range, maybe into the high 280s. Get a flattening of the 21-day moving average here in red, and that puts you upward thrust to a couple supply zones higher in a bear market rally. Let's look at the 30-day volume profile. Does provide some downside support, which is a good sign for tech stocks. And how about the 10-day volume profile? It's telling you where the sellers are just above there. So again, you look at the bigger picture here and I see another move down in the Nasdaq. But one thing I'm kind of getting bullish here on is the Russell 2000 from a trading perspective, because you look now at the percentage of Russell 2000 stocks above their 50-day moving average. It's up near 40%, and it was in deep kind of oversold levels. It got down here around 10%, and finally price came down. And we noticed that breast started to move higher. It brought price with it. That was a good sign. But one thing it's doing a little bit of is bringing some of the Russell above its 200-day moving average. It was down around 15%. It's at 22. I mean, obviously you're not writing home about that story. But notice that price is moving higher and breadth is starting to move up with it. That is a positive sign. And we see from a long-term perspective, bulls really want to take this thing all the way from where it is now, all the way up 70-80% range. They're looking for a big rally here, new all-time highs. Now, I don't think they're going to get that, but it's okay. That's what history usually shows here of what should happen. We go from oversold levels on the RSI. It's now above 50, sitting at 53. Price is rallying with it. That's good. And you'll notice, unlike the S&P and the Nasdaq, which is kind of fading off of this, there's some nice strength here. And look at the MACD. You've got, the MACD line is moving up, looking stronger. That is a positive sign to take price even higher. Momentum Prime Pro, we talked about how it was a little choppy before, and once it starts smoothing out, that's where you want to look to participate. But notably, it's still in a downtrend. So again, longer term trader, this isn't for you. You just got to stay on the sidelines or find something else. Price headed to the downside and still in the moving averages, maybe providing some upward resistance. We'll look at that. Momentum to the downside. Here's your, what traders are looking for, just to pop over the short term moving averages to get some things going and hope for some more. Let's take a look at IWM and why, maybe this thing gets up here to its 100-day moving average in blue, but maybe above its 50-day moving average in green. And you notice that the 100-day has been a lot more of overhead resistance on this downtrend. It's broken through the 50-day a number of times, and you see this volume right here. That's what kind of indicates to me this is where we're likely to see price gravitate up to, and I want to show you why. Let's just zoom into the 6-month volume profile. So notably, it's right there at that kind of chunk that I pointed out of volume. So that's a good sign, right above the 100-day moving average, so potential resistance there. But let's zoom in a little more. Let's go to the 90-day, let's go, and what do we see? It's right up about the same range. So you have some volume up there. But here's the kicker. Here's the 30-day volume profile to the bottom side. That's what you want to see, is buying on you want to see the volume start to build up below, put a base in. That tells me as we move to the 10-day volume profile, see it's below. It tells you there is a move higher in the Russell 2000. I'd say maybe up here to this, high 199, high 190 range, right into this 200 where you see this volume profile. That's where I think the bulls want this. And we look now at junk bonds, which notably are pretty junky, but people finally said, hey, they've been oversold for so long. RSI, here now at 53, almost 54. Well, how can I lose? And they jumped in, drove prices just straight up on this. But notice that momentum is starting to fade this. Now, it doesn't mean that momentum's under 40 or anything's bad. It's just momentum slowing down, price coming down with it. The MACD is kind of rolling over here, starting showing signs of rolling over, that maybe this is indeed the peak and it's coming back down. We'll see for sure. But notice the price on the 21-day moving average is now flipping bullish. It's above the 21-day moving average, which is good. And let's take a look at the price chart. Of course, you want to know what Momentum Timer Pro thinks. You got to sign up. Next report out on Monday. Here's your junk bonds. Why are people buying this? Well, we're on the 5-year chart now, and they say, hey, this thing can't go any lower, because if it does, we're in a massive recession and liquidity crisis. And notably, they're buying at levels that people say you can't lose at. And the risk is, if they end up losing, this thing's going down big time with the economy, and that is pretty scary. Look at the 2-year chart. You got volume profile way above there. Let's go into 1 year, way to the upside. 6 month, still the upside. 90-day, yet to the upside. And where are we going to find the bottom here? There you go. There's your 30-day volume profile. There's where the buyers were at, driving price higher. How about the 10-day? You can see the sellers above there. That's why you likely think here that that junk bonds are headed lower. Notice how they tagged their 50-day moving average here in green, provided some resistance to the downside. 21 days curved up now, trying to form a bottom. If you really want to see a bottom, usually you need to see the 21-day moving average start to move up. Tell me price likely to come down and reconfirm that cross through the 21-day. All right, so hey, with that, that's first part of the Sunday Chart Show. We'll see you back soon for part 2. I'm Steve Van Metre. Bye now.